Welcome back, everyone. Chart Addicts Expert Trader podcast series. Today, we have a very, very, very special guest on the call. Raja, do you want to introduce yourself to the audience?
Hey, everybody. My name is Raja, also known as Raja Banks on Instagram. And we're here with our good friends here. We're going to talk about some fun stuff, I guess.
Yep. Yep. Guys, Raja is also known as WicksDontLie for those of you who follow on Instagram. He is part of the Forex Family and holds the Market Fluidity podcast. It's a live stream that occurs every morning, 6:30 a.m. Eastern time. Raja, really excited to have you on. Can you tell us a little bit about yourself as a trader, a little bit about where you came from as a trader and where you are now?
Yeah, so basically in 2016, early 2016, what was happening was I was working a very successful career. I had a sales job. We had a sales company. We were doing door-to-door sales here in Ontario, Canada. So one day I was just scrolling through Instagram, and one of my friends were into this MLM trading thing. So that to me seemed pretty interesting because like he would come to the office and he'd be like, okay, man, I'm up like $100 this morning, $200. So I would always look at that and say like, how is this working? Because like we're coming to the office and we're getting agents ready to go to the field and work. So that's where I got kind of interested, So I was looking on Instagram and I saw this person called Ted, So he was posting his trades and he was these like charts with black and white bars on it. I didn't really quite understand what that was, but so I started asking him questions, And first thing he said, well, go to babypips.com and see if you can understand at least something. So I did that. I went to babypips.com. I started reading about introduction to Forex, started reading about, what are candles, what are support resistances. So at the same time, I started asking, okay, what should I read? Like what should I really focus on? Because once you write how to learn Forex, you're thrown this huge encyclopedia of like how to trade and indicators and systems and strategies. So you're like blindsided with all this knowledge and you have no idea where to start from. So I used him because like he was the only person who started answering my questions, like instead of saying that, oh no, go buy this course, this and that. No. So he answered questions like, okay, go read this, go do this. So I started to do that. And then it started to make a little bit of a sense to me, So I understood about time frames. I understood about support resistances. Those were the main foundations of trading. So I always look at that as, okay, like, like trading doesn't have to be hard. I mean, of course, there are a lot of strategies out there, just like anything, like if you start sales or if you start real estate, you're going to know that there are a lot of strategies, there are a lot of methods like to do stuff. But the people who really, really succeed are the ones who just stick to one or two things and they just focus on that. So I think from the start, we just focused on 4-hour support resistances. And basically, that was our foundation. And that's how we started.
Wow, that's honestly amazing. You started with the Baby Pips website. So it's really important because you were saying how Uncle Ted wouldn't answer your questions just giving you the answer. He would kind of give you a way to go find the answer, which I think is a really important way to learn. Could you talk about the difference between having a mentor and not having a mentor? How do you think that your trading journey would have turned out if you hadn't had found Ted for another year?
See, it would have been really, really hard. Like, I'll be honest with you, it would have been really, really hard because what happened was now I had this mentor, right? And this mentor was like mildly successful at trading. Like he was trading maybe like 5 lots, 10 lots at the time. And we were really following his lead, like, so basically the way we traded was now there are 6 4-hour candles in a day, right? So our strategy would be to just look at 5 or 6 pairs and only look at the 4-hour candles. So we would just wait for the 4-hour candles to close at like 1 p.m. Eastern, 5 p.m. Eastern, 9 p.m. Eastern, 1 p.m., like 159. So based on where the 4-hour candles would close, let's say if a pair 4-hour candle would close at resistance, we would take a sell. If it was closed at support, we'd take a buy. And then we would have guidance from like Ted and from like all other people in the group that, okay, we're in a buy or we're in a sell. This is where our stops are. Everything was perfect, and then I got a little bit of a taste of having no mentor. And the reason why I say that is not because he abandoned me, but like I abandoned the strategy, or like I abandoned the method I was trading, and I went into this black hole of knowledge, you know. And the reason I say a black hole of knowledge, because I started to look at people on the social media scene or the people on YouTube, and I wanted to get the same amount of moves they were getting, like 100 pip moves, 150 pip moves. So when I deviated from my original path, then I moved into a arena where I was just on my own, you know, because I started learning about trend lines and Fibonacci's and harmonics and Ichimoku clouds and all this bizarre information I started to learn about. And my mentors didn't know that. You know, they didn't know what Ichimoku cloud was, or what a divergence on RSI and MACD is called. You know, so all that stuff started to happen, and I started losing. You know, I started losing, had no direction. I lost my motivation. Like
Wow.
every morning, I'd wake up with the mindset of, okay, man, you know what? I lost last week, or I lost yesterday. Now today, I need to make those losses back. You know, so when you get into that mindset, it becomes really hard. It gets very taxing on your mentality as well. So I mean, if I didn't have a mentor, man, it would have been really, really hard for me to find my own stride.
All right. This is why I told you guys this was going to be a valuable call. We're going to unpack a lot of the stuff that you just said, Raja. Let's start working a little bit backwards. Let's talk about that revenge trading mentality, where people are trading from the perspective of, I need to make up the losses that I just had, and how that affects their trading. What would you say is that difference? What is your mentality now with losses in the past and you moving forward, et cetera, versus how you were trading in that little period of time?
Well, what happens is, now there are two things that happen, right? The number one thing is that you start trading based on probability, and the number second thing is that you start trading based on fear, right? So the big difference between the two is that let's say this morning, one second here,
No, you're fine.
yeah, like let's say this morning we were looking for sells on the GPJPY. So basically what happened was we did execute sells, but for some reason I think the sells were too early, so it hit our stop loss. So now if that was me back in the day, I would have looked at it as, okay, I took a sell, I lost, it's time to take a buy, because if it's not going down, it's going to go up, so I'm going to take a buy. That's trading based on emotions. But in reality, what happened was, since I've been through those emotional stages of losing and winning, I looked at that sell, I'm like, okay, you know what? Maybe my sell was too early. I might want to wait. So this morning we waited for about 2 hours and executed a better sell, which resulted in a 1-to-3 risk reward ratio trade.
Beautiful.
So
Wow. That's a really good tip, guys. If you guys are watching at home, stick to your original bias, right? He said that before he was flip-flopping. Now he's a little bit more strict about his directional bias, and now he's willing to wait for his move to play out. I really appreciate that insight, Raja. I want to go back and touch on two other things that you said before, because I said we're going to work backwards. You were talking a little bit about comparison, about how you went on Instagram and you started to look at other people's strategies, and you're like, I want to trade like that guy. I want to make 150 pips like that guy. I want to do this like that person. How did that affect your trading? And then why is that dangerous for a new trader?
that affected my trading in the way that it made me feel like I'm not competent enough. That's how it affected it.
Okay, no,
Because
I understand.
yeah, because what happened was, in the start, we were winning trades. You know, I started with $1,000 account, and we were making on, like, 150 a day or $200 a day, and that was a really, really nice winning ratio. But when you start comparing yourself with someone else, you don't understand that that person might have a different life experience, or their background must be different, their education must be different. Like their whole experience of life is totally different than you. You
Yep.
know, so that's where a big change comes in. Like, maybe if you're happy with, like, 1 or 2 trades a day, and maybe that the other person is happy with, like 5 to 6 trades a day. So there's a big difference. So in my start, what happened was I started to compare myself with a lot of traders that were making, like 10,000 a day or 100,000 a day, or they were catching moves every day and wins all the time. So that made me feel like I'm nothing, because here I was, trying to learn, trying to get these big moves, but I was always losing. And at the same time, there was these people who were always winning. So I always think to myself, like, how is this possible?
Yep.
There has to be like a secret method, or maybe my mentor is hiding something from me. He hasn't shown me the right way. So when new traders come in the game and they see that, okay, some people are always winning, they start to question what they're learning. And what that means is that when you start with a concept or a strategy, that strategy works. But it doesn't mean that it's going to work in the first week. Yeah, so what I'm trying to say, like all those things, like they really affect you mentally.
Okay. So you were talking about that if they're going to start to question their education. What is it about those Instagram traders that you feel like is different, or is there any difference?
See, now we're moving into a little bit for more controversial things, which I like to speak on, and I think I should. I think the number one thing was that there was no transparency.
Okay.
Right? There was no transparency. There was no like people talk about, oh, I did 1% gain or I did 2% gain. So then you have to ask yourself, okay, 1% of what? You see some profits, but 1% of what? The thing about social media is that certain things are very believable. But when you start to look into more detail, you start to see some gaps in stories. Like you see some sort of things which you're like, okay, maybe there's something wrong over there. So my biggest thing was with social media, I stopped looking at what someone else was doing. I started to focus on myself. And the thing is, like, when you start focusing on the game rather than focusing on the scoreboard, you automatically start to do very well.
That is priceless advice, Raja. I really appreciate you pulling that out. So Raja, you started really trading in 2016. Could you explain to the people at home a little bit about your progression through trading, a little bit about your timeline from when you started to when things started to click for you, when you fell off because you started to do your own strategy, and then when things started to get back into rhythm for you?
Yeah, for sure. So I basically started June 2016. I was very, very disciplined for the most part. And the reason why I was very disciplined in the start was because I had a job to go to. So I'd go to work at like 9. So I knew that, okay, the best time for me to trade is in the morning. And the morning was like from like 5:30 till 8:30. And after that, I'll go to my work, I do my work, come home, spend time with the family, go to sleep, and in the morning wake up to trade again. So the problem started when we started doing really well at our work. We expanded our teams to multiple agents, so we had a lot of downtime. And when you have a lot of downtime, you start looking at charts more. So what started to happen was I started to look at the charts in the afternoon time, like around 2 p.m., 4 p.m., 1 p.m., when there's not enough volume, there's not enough volatility, like for you to catch the same trades as you would in the morning time when there's a lot of volume. So that really started to mess up with like my whole psychology, because I started to overtrade. But then, so once I started having these losses, I started talking to Ted. Now, this is where a mentor comes in handy, So I started talking to Ted. I said, well, we were winning in the start, and now how come I'm losing? What's going on? So his advice was, which I would actually give it to everybody, was just to like look back, look at your winners, and see what similarities you had with the winners. So what I noticed was all my winners were basically the same trades. They were the same candlestick patterns. Most of the winners were at the same time, like in the morning. And all my losses were just random losses. My losses were just random buy, sell. I had no methodology. I mean, all losses were just trying to get a winning trade or trying to make up a loss I had.
Okay, wow. So the winning trades that you had all seemed to have the same characteristics. The losers were just the randoms. It was just the trades that you just took. Okay, that's really good advice. That timeline is honestly a little bit. To me, it's a little bit quick for how fast you seem to have picked things up and how fast you course corrected. Because a lot of traders kind of go on a cyclical loop where they tend to be making the same mistakes year after year. So that's really impressive, Raja.
See, the thing is, I'm sorry to cut you off, but the thing is, like, the sooner you get disciplined, the sooner you start to see results. And now we do these live streams every morning at 6:30 a.m. Eastern for New York's session. And one of the reasons why we really started the live stream now, so we used to have private webinars, with our group internally. We we used to have private webinars, and we would look and say like, man, shit, man, like we're winning most of the mornings here. So how come we don't broadcast this live to everybody? Because if we started to broadcast this live to everybody, that'd be like kind of like, oh, look, guys, so this morning we took a trade, we won the trade, we had a nice day, yada yada yada. So it started as a joke. So once we started doing these live streams, we saw people tuning in every morning. Every morning the numbers started increasing. Like it started in August 2018. We had around like I think 30 people watching live. And this morning we had 1,800 people watching live.
Yep. And I tuned in for a second. For a second just to check out the live stream. It was awesome, guys. And I would highly recommend you guys check those out at home. Raja, I actually got introduced to the live streams last year. A friend of mine who was trading Forex for a couple years hadn't been making money consistently. And he started getting onto live streams and really took a chance to understand price action and market structure, as opposed to constantly confusing himself with these harmonic strategies and that strategy and that strategy. And things started to change for him. Because the candlestick structure that you guys are explaining, the price action structure, it works on different time frames too. You guys are really providing value. Yeah. Okay, enough about that. I want to talk a little bit about, you were talking earlier about you were searching for Forex information when you first started. I know a lot of people watching did the same thing and are doing the same thing. What is the biggest misconceptions that you saw when you first did your Forex research to what you know now? Like I know I read things at the beginning that I just completely disagree with.
Man, the biggest misconception was, so when you start trading, you're told three things. The number one thing is that the Forex is a $5.2 trillion market. The second thing you're told is that you can trade 24 hours a day, 5 days a week. The third thing is that you can make money from anywhere in the world when you're trading. And out of these three things, the first thing is true. The two other things are false, because what happens is that if you're not disciplined, you're going to take on trades, right? And the more trades you take, more prone you are to take a losing trade. So I'm going to go back to a point of the live stream. The reason why we really started the live stream, like another reason, was because just to show people that all you need to be is discipline. If you're disciplined, coming through the charts at the same time every day, you're going to see things. Man, the thing is, okay, the currency pairs have different personalities. If you're looking at GBP/JPY, you're going to notice that GBP/JPY is going to move differently in New York than it would in the Asian session. And the big reason is because in the Asian session, the pound yen is being influenced by the yen, right? If you look at the same pair in the London, you will notice that in London session, pound yen is going to move differently than it would in the Asian, right? And same goes for the New York time too. So it's very important that you set a timetable, because trading is a hobby. At the end of the day, it's just a hobby. People start this hobby to trade. They want to pay for a course to learn this hobby. But if you're not going to set a time for this hobby, it's going to get really hard. Because when people sign up with our mentorships and courses, I tell them one thing, that okay, this is a part-time job, and if you have a real life job, you go to work, you do your job, you put your hours in, you come back to your car, you drive home. No one, very rarely, sits in their car to just stare at the building to think like, I wonder what they're doing inside right now. I wonder what's happening right now. I wonder if Helen took her break or not. No one does that. We all go home. But when you're trading, you have set amount of time to trade. Like I trade from, our live streams run from 6:30 till 9 a.m. That's basically around 3 hours, 2.5 hours. And that's my time to trade. If I'm going to make money in that time, so be it. If I'm going to lose money in that time, so be it. But I have to stay disciplined. If I'm not going to incorporate this time strictness in my trading will fall off. And I'm going to be like the rest of the 90% who always lose.
That's priceless. So. Let's stay on that topic of discipline, because it does seem to be one of the most important things, that and patience. Let's talk about your morning routine when it comes to right before you get on the charts. Do you do anything different now before you get on the charts? Do you try to prepare yourself, or are you good now where you can just jump into it?
Yeah. So basically what happens is I wake up at 6 a.m. I turn on my computer at like around 6:05, 6:10. I kind of just like look at the charts, and after that, I like kind of do like some stretching. I go downstairs, I get some fruits, I cut up some fruits, and by the time I come back in my office, it's 6:30. And by that time, my mind is fresh. I looked at the charts in the morning, so I know what's happening. So once the session starts, we're basically looking at which pair is creating a high or a low. Now, I trade two pairs, GPJPY and gold. So I just look at, okay, which one is making a high or a low? Because if a pair is trending up or trending down, that means it's trending. And from what I know is that if something creates a high or a low, there's a 80% chance price will retrace and retest that high or low. And that move towards the retest is the trade I'm taking every day. That's the only thing I hunt for day in and day out.
Jesus. You make trading sound so easy and so simple. And if you guys get on the live streams, it does start to become more simple. But let's touch on, you said you trade GJ and gold. Why those two pairs specifically? And what's the importance of trading fewer pairs as opposed to, obviously like 7 or 8 or more pairs?
Yeah, so basically what happened was once we started in the beginning, we started from trading USD CAD. And the reason we started from USD CAD is because I live in Canada, so it just made sense to trade CAD. The US is just south of the border, it's just right there. So it made sense to trade USD CAD. So we started trading USD CAD. Then there were some fundamental issues happening with USD CAD, so we switched to USD JPY because USD JPY is one of the most common pairs to trade. So we're like, yeah, why not? Let's trade USD JPY. Then I think after Trump got elected, USD JPY, I didn't really, what's the word? Didn't really comprehend why USD JPY was doing the things it was doing. A couple of people in our group were trading GBP JPY, and GBP JPY now has a lot of volume. It's more volatile than the USD pairs. So I started looking at GBP JPY. I started to look at for about a month and a half until I realized that, okay, it kind of has the same moves like the dollar yen, but it moves faster. So maybe I want to look at it for a month to see if I can really understand its nuances of why it does things and how it moves through sessions. And once I really started to understand them, I started to execute trades on it. Right. So slowly I focus on, and the reason why you should only be choosing one or two pairs is because you need to really understand them. If you look at all the big traders out there, all the successful gurus out there, you will notice that they only focus on one or two instruments, like oil, gold, cable, like maybe the euro or the pound. They very rarely look at more than 2 or 3 instruments to trade on. And most of the time, we come to trading to have independence of time, right? And if you're going to be looking at the charts at all hours of the day, you have no independence of time. Then you fall into this whole, your time management with trading just falls off the grid, because you're at the grocery store, you're looking at the charts, you're at the gym looking at the charts, you're watching a movie, you're looking at the charts. There's no discipline, no. And when you start to do this, it doesn't really work, because you keep losing, you keep over trading, you keep blaming people, and you just fall into this whole circle of self-sabotage, because you're not disciplined, so you lose. You lose, you get angry. When you get angry, you start blaming everyone around you.
Oh, that loop. That's the loop right there. Guys, if you catch yourself in one of these loops, what would you recommend to a trader who's a new trader? They find themselves in one of these loops. What is that thing they should snap out of? Should they stop trading, get back into it later? What is that quick, what is the most important thing that they do when they find themselves in that loop?
Most important thing to know is if you find yourself in that loop and you've lost a lot of money, just look around you. If you look around you, you'll see that on average a person makes maybe a maximum, I'd say $150 a day, working 8-9 hours. And I see people losing $300 a day, $400 a day. And that loop is very dangerous, because you don't understand what you're putting yourself through. You don't understand what you're putting your significant other through. Or, if you have kids, you're losing. You don't understand the amount of impact that's having on you. And that's being reflected on your kids, your wife, your girlfriend, or your mom and dad, your brothers and sisters, because it affects them a lot. because I know people who trade in the morning, they win in the morning, they lose in the afternoon, and their whole attitude towards everything just becomes really toxic. You become this person where you're like, man, I don't like my job. I'm losing in trading. I don't know what's happening. Maybe it's because of the relationship I have with my, with the person I live with or with my kids. It's just a very toxic stage to be in life. So once you're disciplined, okay, so another big part of my morning routine is I'm done trading at like 9:30 a.m. After that, I spend time with my family. Now a lot of people are home right now because of the quarantine issues happening. So a lot of people have a lot of time on their hands.
Yep.
So when you're a trader and you have a lot of time on your hands, when work is not taking you away from the charts, you're putting a lot of time on the charts. And that's dangerous because right now, a big part of my morning routine is to go over my performance from this morning. So that's going to keep me away from taking more trades.
Absolutely priceless info as usual. You were talking about some of the fundamental stuff earlier, and I want to move backwards a little bit because I don't want to undervalue what you just said, guys. The over trading and the mentality that you'll have if you do start over trading and get in that loop, it's going to affect the rest of your life. So make sure you guys are cognizant of that. But you were talking about how some things start to affect the UCAD, so you guys moved to UJ. UJ was moving wonky, so you moved over. Do you use fundamentals? Some of these pairs now especially are a little bit more fundamentally driven because there's a lot of price wars going on. There's a lot of market effects. Do you use fundamentals at all? And if so, how do they play into a role into your trading?
See, the thing about fundamental is all fundamentals are long term. They'll move price based on your, I'd say minimum is going to be the 4-hour time frame, the daily time frame, the weekly time frame. Then maybe the macroeconomics may push, let's say, for example, gold bullish overall. But if you're looking at gold on a 15-minute or the 30-minute, it may start to go down. And you see those moves, you execute on those moves. So from my perspective, I keep fundamentals in the back of my head, but I watch what's happening currently. If candles are going bearish, I'll look for sells. If candles are going bullish, I'll look for buys.
Beautiful. Really appreciate that answer. How would you describe your trading strategy? How would you describe, so all the people at home now they want to get into a little bit more interesting, a little bit more about Raja himself. How would you describe your personal trading strategy? And if you guys want to know for yourself, go check it out on the live stream, 6:30 a.m. Raja, let's get your words on this.
Just be a caveman. That's it. Be a caveman. What I mean by that is, there are certain groups that really undermine the importance of keeping it simple, and keeping it simple, it's basically the way how I look at the charts is I'm going to look at the chart from a 4-hour or a 1-hour perspective. I'm going to see where the most recent support resistance is, and then I'm going to mark up that, okay, if the most recent support breaks, where is price most likely to head to next, which is going to be the next support. If resistance breaks, where is price most likely to head off to? That's going to be your next resistance. And next, I figured it out that, okay, if I'm going to trade a currency pair, let's say GPJPY, all I have to do is to trade one 1-hour candle or one 30-minute candle. Because those candles are going to be at least 20, 25, 30 pips. And if I can successfully grab one 1-hour candle every day, I have set myself up for long-term success.
For sure. Now, Raja, to the person that says, but swing trading, this and that, if you hold the trade, you can get more pips and, potentially make more money and all this. What do you say to that person sitting at home?
That's true. It does work. The thing is, candles, they move the same way on all time frames. But the problem is that a lot of people, their risk appetite is not enough to sustain a swing trade, which means that when price goes in a drawdown on, let's say, from a daily time frame, that drawdown might be 30, 40 pip drawdown. But if you're a trader, and if you're a new trader basically, and if you're looking at the chart, and if you entered on the daily time frame, you're looking at the 15-minute chart at that point. You're looking at the 5-minute chart at that point. You don't have the daily perspective in mind. If you're down 40 pips in drawdown or 50, 60 pips in drawdown, you're thinking about, oh man, this is going against me. And then you add another position. Now your risk is more than what you anticipated. So what happened with me is now I did extremely in-depth analysis on why my swing trading wasn't working.
Okay.
And what I figured out was that I would take a trade, and my swing trade would go into profits of about 15 to 20 pips almost all the time. But what would happen after a few hours, it would always go in a drawdown, and it would stay in drawdown, and the drawdown would stay for long enough for me to close it in drawdown. And then after a while, I'd say the price moved my way, and this happens to a lot of people. This happens to 80%, and they always say, oh man,
Yep.
like, how can I just keep it holding for a little bit more longer so it goes my way?
100%.
And the solution I found to that was that, so I do a lot of mathematics, right? So I said that, okay, if 80% of the time my positions are going in 15 to 20 pip profits, this means 100% of the time I can secure those positions, right? Which means I can take profits on those positions and maybe leave a small percentage running, because if a higher probability goes in a drawdown, I want a small percentage of that to go in a drawdown, not the whole thing. It makes no sense.
Yeah.
Because like doing
Wow.
that at the end of the day, I'm securing something. I'm ending the day saying that, okay, you know what? I made money, and now I'm leaving a small percentage running at break even, because there's a 20% chance it might keep on running, and there's a higher chance it might stop me at break even.
This is absolutely priceless info. Raja, let's talk about you for a second.
All right.
This strategy, everything that you've just talked about strategy and talked about the specifics, I want everyone to go back and rewatch. You might need to rewatch some of this maybe 3 or 4 times. Make sure you're taking notes. Raja, let's talk about you, Forex Family. Let's talk about market fluidity. Let's talk about Wicks Don't Lie. Walk me through the timeline about how all this happened and how all this started.
Well, so when we were doing private webinars, we were winning trades. We were focusing on support resistance, and this one time, price was moving bullish. I think it was gold buy. I think it was back in September 2016. Yeah, September 2016. We were in a gold buy, and gold was moving up. And Ted was actually looking at the wicks to the left, and he's like, "Oh, look at these wicks. This wick is going to get filled. This wick is going to get filled." And price moved up to the wick, and it reached that wick. We closed our profits, and then price started to retrace. And that was a 4-hour wick. So if you break down the 4-hour wick on, let's say, the 1 hour and 30-minute time frame, you're going to see that that's going to be a minor resistance. So we saw, okay, wick got filled. We're like, oh, interesting. This is really interesting. So then weekend came. I started to look at the candles. I started to look at the 4-hour candles and daily candles. And I noticed that if price is bearish and it's leaving a wick, there's a higher chance that that wick gets filled. So measuring daily wicks and 4-hour wicks, you have 20, 30, 40 pip wicks. So we thought about it. We're like, okay, perfect. So if we can figure out a way on a smaller time frame to execute and just look for that move, we could have profitable trades. And that was it. That's how Wicks Don't Lie was formed, because like we'd see the wicks were getting filled. So just like Shakira's hips don't lie, wicks don't lie. I mean, if there's a wick to get filled, there's a higher chance that wick is going to get filled. And that was the trade.
That's such an organic way for something to come up. That's so wholesome. All right, that's great to hear. Walk me through how things started before. I know you guys were in some Discord chats, if I'm not mistaken, and then you guys were in some forums, and you guys started to get some traction. How did the Forex Family thing come about? How did the group chat thing come about? How did that spread to what you guys are doing now?
Oh, okay. So basically, we started from Facebook groups. Right. We had Facebook groups. So we had like multiple, I think there were like, in the start, there were only, I think there were like 20 people in the start. And then Ted hosted another mentorship intake. Then we grew to like 40 people, and then slowly people started joining. And once people started joining, we called it a family. It was like a Forex family. We're like, okay, as members are increasing, we're like a family, because we trade Forex every morning. We profit or lose, whatever. We're family. We help each other. We share documents, knowledge, and stuff like that. So as groups grew, just like anything, you start having contradicting ideas. So we started like, saying, okay, perfect. So now we have people with different ideas and this is awesome. We're growing and we have now different groups, but then toxicity starts to come in, because when you're young, you're trading, you're winning, you start to have this ego saying like, no, this is the best way to trade. What you do, that is wrong, and to that I say, if you focus on a certain thing for a long time, it's going to work. Every strategy works. It's just a matter of like how long can you consistently stick to that strategy, right? So anyway, that started to happen, and then we moved to WhatsApp groups, and then there was a time came when people started asking me that if I teach, and at that time Ted was kind of like stepping away from the teaching perspective, and then we started this whole idea of like being fluid in the markets. That okay, you come in the morning, you look for a trade, you take that trade, you're fluid enough to call it a day. You call it a day, and then that's it. So that's when market fluidity came in. That okay, you have to be fluid. You come in just like you go to the gym. You go to the gym, you do your workout, you go home, you have a nice day, perfect. Same thing. You come to the markets, you look for a trade, you take a trade, win or a loss, and you go about your day. So that's how market fluidity started, and then the Forex family, we created a website with chat rooms in it. Those chat rooms are still there, so that's how we grew slowly, helping each other out.
That is incredible. I really appreciate the backstory. Raja, last thing I wanted to ask you is some tips for new guys. Now, you've already given them $1 billion worth of knowledge, to be completely honest, to be completely real with you. But is there any final tips? If somebody's watching this, they're in their first 1 to 3 months trading, they see all the people in their group chats and all in their Forex groups winning, and they feel like, I can't see myself ever getting a grip on this. Any advice to those people in their first couple of months or in their first 1 to 6 months?
I would say don't rush it. If you're going to rush it, it's never going to work. Because think about this, like when you start a new job, you're going to get a promotion after a year, 2 years. In the same way, if you start to play a new sport, you're going to get good at that sport maybe in like a year, 6 months. Like when I started rugby, I had no idea what was going on except for the fact that okay, we get to hit people, So I really start to get good at that after like 6 7 months. So when you're a new trader, you want to get to the level of where these Instagram traders are, or where these people have like nice cars are. But you have to understand it will take time. Everything in life, it just takes time. One big example is if people go to my Instagram, WicksDontLie, and if you go back to last year, March, I started trading one lots. I took a big loss with a crypto exchange. I lost around like $160,000, $70,000. The crypto exchange just died. So that was a big,
Wow.
big blow. Yeah, so I started with one lots again. And it took 1 full year to upgrade from one lots up to 8 lots, like since till yesterday.
Wow.
So it took a full year. And I see people that start with 50-cent lots, and they want to get up to like 5 lots within like 4 or 5 months. That's a bad habit. You need to be consistent enough to say that, okay, you know what? I've been trading one lots, or I've been trading like 50-cent lots for 4 or 5 months, and I'm making consistent gains. Because trust me, man, once you start seeing those gains consistently, especially when you're disciplined to your plan, automatically you start increasing your risk appetite. It happens naturally. And my biggest tip to people is that if you have time in the mornings to trade, tune into the live streams. Tune into live stream. Like one big reason we do the live stream is to just show everybody how you can be disciplined and you can be consistent at the same time.
Beautiful. Beautiful, beautiful. Now, you touched on this. This was kind of my fire round question, which was the difference between winning and losing on the trader's psychology on a week-by-week basis. How does it affect your next week, or how does it affect your trading in general when you have a good winning week, and how does it affect your trading when you have a losing week? I think a lot of traders at home know how it feels to have a losing week, but explain to them a little bit about the consistency in winning.
Nothing at all. I mean, when people lose a trade, I get that now, because when I was losing a trade, that was really bumming me out, because I was coming from a background where I was very successful. In my sales job, I was making around 120, 130 a year. So I was coming from a place where I was already making an income. So when I was failing at trading, that was really affecting me because I couldn't perfect this stuff. But then as time passed, as I started to understand the basic psychology of trading, losing trades were just opportunities to learn from. When you're losing trade, you got to learn from it. And like, if you're getting very anxious about it or emotional about it, then that's something else. That's something to do with the debt you have or the promises you've made or the pressure you have to succeed in trading. So you really have to fix those issues when you come into trading. People should come to trading as a hobby, not as a means of income. That's the wrong way to look at trading, that I'm going to start to trade to make money. No, money is a byproduct of getting really consistent in trading.
So I'd say first steps first is leave everything at the door when you first step into the markets. Because
Yep.
you were talking about the debts and all the other BS that you might owe somebody money, whatever it is. You can't bring all that negativity into the markets because then it affects your trading.
hmm You got to leave ego at the door, and you got to take every day as, okay, let's see if I can win a trade or not.
Awesome. Mr. Raja Banks, Wicks Don't Lie. Really appreciate you